There we go. All right, mic check 1 2 1 2. Let's test it out. Let's see if that's better. JP, what's up? How you doing? Standing on business. How y'all doing? Can y'all hear me? How is my audio? Here, I'm gonna check it myself. Yo, yo, yo. Here, I'm gonna check it myself. Yo, yo, yo. Okay, that's good. That's much better. Much better. Much better. Let's see, how can we do this? How do I want to do this? Let's pop this out. Let's focus on this. Bring y'all over here so I can see y'all comments. There we go. I think that's pretty cool. How y'all doing? Ladies and gentlemen, welcome back. I apologize for the technical difficulties. I just wanted to talk about how the stock market yanked us back and forth this week. So if you made it out on top, congratulations. Right? Shout out to you if you made it out on top. But yeah, it was a rough week. All right? It was a rough week. Matter of fact, last week was the kind that you're going to tell people about later. The stocks came roaring back after a rough stretch. All right? This is what we call a rough stretch. How it just was pretty much going down for days in a downward trajectory. And then out of nowhere, boom, right? So the semiconductors, for those that don't know, that's just a fancy word for the chip stocks. Whenever you hear somebody say semiconductors, they're talking about the microchip stocks. Those are the companies that make those tiny, teeny computer brains inside your phone, your laptop, and every AI data center out there. They pretty much went on a full counterattack after 5 days of getting their ass handed to them. 5 days of belt to ass in the semiconductor sector came back. All right, so I'm going to slow this shit down for a second and tell y'all exactly why this happened. That's what we're going to talk about today. I'm not going to use big ass words because I know a lot of y'all brand new to this. Not saying you don't understand big ass words. I just like to keep it simple. I think financial advisors and technical analysts or whatever you want to call them, a lot of people make this shit more complicated than what it actually needs to be so that you can need them. They want this shit to be complicated to you. So you don't understand it. That way you think, you know, they're worth more than what the fuck they actually are. No offense to financial advisors. By the way, TikTok, nothing in my live stream is financial advice. This is for educational purposes only. Okay? But like I said, if you're brand new to this, you will understand every single part of this show by the end. And if you've been trading for a while, you're going to see the pattern underneath it. I want to teach the other people how to recognize the pattern as well, because that's what we do in the stock market, in the futures market, in the crypto market, in the Forex market. We recognize patterns. And the pattern is actually going to make you money once you learn to spot it early instead of after the fact. Y'all do me a solid one. Put a W in the chat if y'all locked in, or tap the screen. I need everybody to tap the screen. Y'all tapping is clapping. Tapping is clapping. I need y'all tapping. You feel me? All right. So if y'all stick around to the end, I'm going to show you what would have to go wrong to break this whole story. All right. So every good trader needs to know why. You need to know. You need to know. You need to know not just why something is working, but what would prove it wrong. Okay. Y'all, if you're new here, hit the follow button so that you don't miss another live stream. Can y'all do that for me? Hit that follow button and hit the notification bell, because I come on here randomly. I don't come on here whenever you want me to. I don't work for you. Now, the big picture, ladies and gentlemen, I want y'all to understand, understand and overstand, because you always want to zoom out before you zoom in. A lot of y'all like pretty much watching TV with your nose on the screen like this. You can't see shit. You got to zoom out so you can see the bigger picture. You understand? You have to do that. That's rule number one in this game. Don't just look at a stock. I want y'all to look at the whole ocean before you look at one wave. Do you get it? If you get it, tap the screen. If you get it, tap the screen. Yesterday, The Dow Jones, the S&P 500, and the NASDAQ, they all jumped hard. They all bounced hard. Okay? They all went up a lot. Real quick, those three names are just basically three different scoreboards. I don't want to confuse anybody. When I say the NASDAQ, when I say the S&P 500, and when I say the Dow Jones, those are just three different scoreboards. The Dow Jones tracks 30 big ass old school American companies. I can hear your voice. I can learn from you. That's what's up, Ken Jones. Thank you. Thank you. I appreciate that. Good. You the one who just told me that it was real bad on the last live stream. Shout out to Ken Jones for helping me with the technical difficulties, making sure that my audio sounds very good for y'all. My bad. I take it back, Ken Jones. I take it to it wasn't Ken Jones. You can hear my voice though, nonetheless. All right. So, like I was saying, those are three different scoreboards. We was talking about the Dow Jones, and I was explaining to y'all that the Dow Jones is just basically 30 big old school American companies. You sound like one of the guys. That's what's up. Okay. The S&P 500. So now you know what the Dow is. Put a W in the chat if you know what the Dow Jones is now. You should never be confused when you hear somebody say the Dow, the DOW, okay? The DJ, the Dow Jones. You know that it is basically 30 big old school American companies. Don't ever be confused on it. The S&P 500. Who can tell me what the S&P 500 is? Let the new people know, y'all, this is a each one teach one environment. So, you know, we help each other out. If you know the answer to the question I'm asking, go ahead and put it in the chat. This is an engaging live stream. You have to engage here. That's how you get your brain to make sure that it's locked in. If you don't know what the S&P 500 is, all right, there we go. Ken Jones got it right. Solution got it right. It's the top 500 companies in the United States. So if you didn't know what the S&P 500 was before, you now know what it is. Top 500 companies in the United States. Please don't nobody come in here being no asshole, saying shit like who don't. It's a lot of people that don't know. I was a 30-year-old man that didn't know it at one point in time. Okay, there's grown ass men and women out here that don't have the slightest clue as to what the fuck the Dow Jones is, what the S&P 500 is, or what the NASDAQ is, and we are here to change that right now. We are going to change that. The Dow Jones, 30 big old school American companies. The S&P 500, the biggest companies across every industry. Okay? The NASDAQ leans heavy on technology and growth companies. So when you think NASDAQ, think technology. Think technology when you hear NASDAQ. Think old school big companies when you hear Dow Jones. Think 500 best companies when you hear S&P 500. Now, y'all got that? Y'all know all three of the scoreboards. That is the whole market. When all three of them go up together, that's not one industry having a good day. That's the whole market breathing a sigh of relief at the same time. Okay. The NASDAQ alone. Let's look at the NASDAQ. All right. So the NASDAQ alone, I want to look at it on a bigger time frame than that. 5 day. Here we go. This is cool. This will show some of what I mean as far as how much it went up. The NASDAQ jumped almost 2.8% in one day. I want you to picture it like this. Imagine if your entire retirement account is $100,000. All right. Can y'all imagine? Use y'all imagination. Here at Ironworth Trading, you got to have an imagination. You got to be able to pretend. Y'all remember we was kids and we used to pretend and use our imagination to pretend to have things that we didn't have and to be able to be people that we wasn't. You see what I'm saying? You could be somebody when you was a kid. You can imagine you was an astronaut. You could pretend to be a doctor, pretend to be the president. You can be whatever you want to be as a child, but as an adult, we equate pretending and imagination with something that is fake or not real, and that's not true. All right? So here, I need y'all to be able to use your brain, use your third eye, use your head for more than just a hat rack, and imagine Okay, with me. Imagine your entire retirement account. Some of y'all, you ain't gotta imagine. You know what your retirement account is. But for those who can, if you could just picture this with me, let's say your retirement account is $100,000 and it is invested the way the Nasdaq moved. You made almost 2,800 in one single day just from the money sitting there. That is a big wave. Do you understand what I'm saying? So, what caused the whole ocean to rise, y'all? Two things happened at the exact same time, almost like two hands clapping together. The first thing that happened was inflation cooled off a little bit. Who in the chat is confused about inflation? That $100 bill that you got, right? Let's say you got $100 bill, and today that $100 bill can buy you, I don't know, look, let's say that $100 bill can buy you a phone. We know it can't, but whatever. Let's just say, let's go ahead and say 1,000. Let's say you got $1,000 and it could buy you a phone. Next year, that phone is going to be worth $2,000 and your $1,000 is only going to be worth $500. That's how inflation works. I hope that helped you out. All right. Your money today is going to be worth less than what the fuck your money is going to be worth tomorrow. And whatever you paying for is going to be more expensive. That's inflation in a nutshell. That cooled off a little bit. There is a number that the government tracks, and it's called core PCE. Who can tell me what core PCE is in the chat? What is core PCE? Y'all about to learn today. You're going to leave this live stream knowing more than what you did when you came into it. Who can tell me what is core PCE and what does it mean? All right, I'll let you know. I'm going to give y'all a few seconds to type it in. Core PCE. Don't worry about what those letters stand for. Just think of it as the country's grocery receipt. Okay? This is the country's grocery receipt. It measures how much more expensive everyday shit is getting for us. How much more expensive is this? But we're not talking about food and gas because those two jump around too much on their own to give us a clear record or a clear read. So they don't count that in the core PCE data. But the number came in at 3.3%. That's higher than a year ago. The month before, it was 3.4%. That is a tiny, tiny drop. But basically, it went from the prices are climbing kind of fast to the prices are climbing just a hair less fast. On its own, in normal times, nobody would give a fuck about a move that small. But these aren't normal times. All right? This is why that tiny ass number mattered so much. The second thing, remember I told you, it's like hands clapping together on why this shit went up like this. The Fed's moved. You could think of the Federal Reserve. Everybody just call it the Fed, but it's the Federal Reserve. They are like the thermostat for the entire U.S. economy. Whenever the room is getting too hot, all right, the prices is rising too fast, the Feds turn the interest rates to cool things down. Higher interest rates makes it more expensive for companies to borrow money for them to grow. And more expensive for me and you to borrow money for houses, to borrow money for cars. That's going to slow everybody's spending down, which eventually slows inflation down too. But it also makes the stocks less exciting because now you can just put your money in something safe and boring like a savings bond and still make decent money without any risk. So why gamble on stocks if safe money is going to pay well? Do you understand what I'm saying? So right before this rally, the market was scared that the Feds was going to keep the thermostat turned up high, or we felt like they was even going to crank it up even higher. Do It Better says percentage commissions economy is that close to the PCE meaning. Is that close? You're asking me? Are you asking me? Y'all, you know the answer to that. Are you being sarcastic? I know you're not being sarcastic. You really asking me. Yeah, you close. He says, no Google, I'm listening. What you mean? Why you said no Google? Look at my guy. Lost Boy Johnny, what's happening? How you doing? But the answer is personal consumption expenditures. Do it better. Personal consumption expenditures. How you doing? I'm good, Lost Boy Johnny. How you doing? Let's say I don't even know where to start when it comes to trading. Thanks for having this live. Well, Chantel, you do know where to start. All right. When it comes to trading, it starts with learning. If you could learn, Chantel, you could earn. I promise you that much. The one thing I highly recommend everybody do if you want to start trading is some research. And when you're done doing the research, the most important part in the word research is the prefix. All right. What does re mean, ladies and gentlemen? What does re mean? That's right. When you think you fucking done, you're not. Search again. All right. You searched for information. I want you to research again. Research. Search again. You're not done. And use all the free resources that you can. There's so many videos on the topic on YouTube. So many. You can get on Reddit and learn. Pinterest. There's so many cheat sheets on Pinterest. Your head will spin. And literally embed yourself in this stuff. But don't just learn the information. Me and a good friend was talking yesterday, and we was talking about how information is not power. Knowledge is not power. Applied knowledge is power. You have to actually execute the information. Lost Boy Johnny said, I finally hit 50K on my Roth. Congratulations, Johnny. That's what I like to hear, man. I'm stuck on Webull. No, you're not. You're learning how to navigate Webull. You're not stuck. Don't even say shit like that, Ken Jones. It may feel that way, but as long as you keep trying, you're not stuck. You're moving forward. The worst thing a person could do is be in hell and sit in hell. And you just stuck in it. Sometimes you got to go through hell. Keyword, go through. That means you're going to make it out. You feel me? All right, where was I at? I was telling y'all why the market rallied the way it did. I told you that the Feds and how they was feeling was a part of the problem, and inflation was a part of the problem. Right? That's where we was at. Where was we at? I got to get the live stream back, right? Because I want y'all comments to be out. Let me see. I got to be able to read y'all comments. Hold on. Yeah, we was talking about the Feds. There we go. There we go. And I'm going to move it over here so I can read it. How y'all doing, though? Let me know where y'all listening from. What city and state are you listening from right now? What city and state are you listening in from? We got Florida in the building. Detroit, Michigan. Shout out to Detroit. What's happening? Dallas in the building. What's up, y'all? I appreciate y'all for stopping through. I just like to see all the many people from across the nation that I'm actually reaching out to. All right, and y'all actually showed up in class today. I'm proud of y'all. Or you can't. It might not be a class for you. This is the Ironworth Trading Show. I'm not. Everybody don't need to learn. Some of y'all already got it figured out. Goodyear, Arizona. Okay, I will be there. I will be there. All right, so look, right before this rally happened, the market was scared that the Feds was going to turn the interest rates up. There was also people talking about, there was voices inside the Feds pushing them to actually raise the rates again. See what I'm saying? That fear was sitting over the whole market like a gray cloud. Now, what that inflation number came in, when it came in, it was just a little bit cooler. It gave a lot of people a reason to believe. Thank you. I appreciate you for the gift. It gave a lot of people a reason to believe that the Feds might ease off the thermostat instead of cranking it up. Less fear about them doing that. Okay. Less fear about higher rates means more appetite for risk, which means more appetite for stocks. That's one thing. That thing one and thing two clapping together. I was telling y'all about cooler prices and then the Feds not scaring the shit out of people. That's why the market went up. But what I need you to really understand, because this is the difference between somebody who repeats headlines and somebody who actually is a good trader. Cooler inflation alone does not create a rally this size. Cooler it can't just be that. Thank you for the gift, V. I appreciate you so much. We block this dude in here talking crazy. Gotta go. All right. Got him up out of here. All right. So it can't just be that by itself. It opened the door. Yes, that opened the door for this rally. It doesn't push you through it. What pushed the market through that door was proof. We got real hard dollars on the page proof. That is the giant pile of money that is being poured into artificial intelligence that is actually turning into real revenue. Not promises, not trust us, money is coming. I'm talking about actual money showing up. That is what set off the explosion. And that is what brings me to my next topic, Microsoft. We're going to pull it up on the chart real quick. Now, I was live a few minutes ago. We had some technical difficulties, and I was asking y'all, I don't think y'all could hear me, but I was asking y'all who all is invested in Microsoft. And who's invested in Microsoft? And if not, why not? If you are, why are you invested in Microsoft? Lost Boy Johnny says, I am unfortunately not. Lost Boy Johnny, I would like to know why not. I would like to know why not. Let me show y'all something. June the 1st, Microsoft hit $472 a share. Somebody said it's a dead cat bounce or a bear market rally. Empowerment says, I agree. Plus the input of feds pumping billions into the economy, right? My bad, I didn't see y'all comments. But yeah, in the beginning of June, Microsoft hit $472 a share, right? And by the time it was the 25th of June, Microsoft fell all the way down to $349 a share, only for it to damn near fully recover and hit $466 over this last week that just went by. I think they're massive spending on AI. We're going to talk about it. Microsoft jumped over 15% in a single day. Let that sink in for a second. Microsoft did something that has literally never happened before on Wall Street. Not rare, not one of the best in years. Never happened before. Not once in the entire history of the stock market has one company added that much value in a single day. Did y'all know that? I'm going to slow it down and explain to you why it happened. If y'all stick around, you're going to know. Microsoft is pretty much FCF negative. Amazon and Google are already FCF negative. Empowerment says over 500 billion also. Billion. What you talking about, Empowerment? Be more specific. Y'all be more specific. Thank you for the follow. Y'all, if y'all new here, hit the follow button so you don't miss another live stream. Hit the notification bell so you are alerted when I go live. That was added to the market cap. Okay, good analysis. They jumped over 15% in a single day. 15% on a company that was already worth trillions of dollars. Empowerment. They added that to a company that was already worth trillions of dollars. What's the chart called in the top right? That is you talking about up here? That is a heat map. Heat map. That is a heat map. And it's just showing you sectors all at once. I thought I typed, yeah, I did. I typed it in. Yeah, heat map. So I'm gonna put this number because that's the single day added about $450 billion. So you said 500 billion, about $450 billion to a company that was already worth trillions of dollars before the move even started. Now, here is the part that everybody skipped. I want to put that number in a picture you can actually hold in your head. $450 billion is more money than most entire countries make in a year. It's more value created in 24 hours than almost every company on earth is worth. Total, from top to bottom. It was the single largest one-day dollar gain for any stock in the entire history of Wall Street. Microsoft's best day in 18 years. Empowerment says the Bill and Melinda Gates Foundation Trust sold its entire remaining stake in Microsoft, offloading its final $7.7 million worth of shares for about $3.2 billion in the first quarter of 2026. People hear these numbers and they heads start fucking spinning. They can't fathom how much money is being talked about right here. Everybody should have been adding Microsoft when it was slightly under $400. You fucking right about that. Microsoft is valued $3.4 trillion on $331 billion in revenues. That's 10 times the revenue for a company with zero FCF. Tim, I'm gonna put it this way, Tim. You might be one of the only people, I heard a couple other people, but you might be one of the only people out here crying about the FCF. Tim, do me and the other good people in the chat a favor and explain to them why the FCF matters with a company, whether they have positive or negative FCF. I know it matters. I ain't say it didn't. It's an each one teach one community. You brought it up, so I want you to do me a solid and explain. Because it matters, but it didn't matter here. It didn't matter yesterday. It didn't matter over the weekend. It doesn't take away the fact that $450 billion was added to them. Regardless of the FCF. You see what I'm saying? Now, like I said, everybody skip past this part when they talking about it. It's the part that actually matters if you want to trade off this kind of news instead of just being amazed by it. We want to know, why did this happen? Tim said FCF is free cash flow. It's the net money a company adds to the bank yearly to do things like buy shares, pay dividends. And if they ain't got no money to do that, what does that tell you, Tim? If they have a positive amount to do this, what does that tell you? If they have a negative amount, what does that tell you? Whether they use this money to build data centers, says Tim. Hey, Tim, thank you for that information, for sharing that information with the group, too. I appreciate it. Free cash flow is money that is used to a company. They are going the route of WorldCom and Enron. Just reading what you said, right? First, we're gonna let's slow shit down. They are going that route, but Microsoft got a division that I'm looking at. I ain't heard you say this is what I'm looking at. I'm gonna type it in the chat. What you know about that word? What y'all know about Azure? That's right, Tim. That's fucking right. What do you know about it? I know all about them. Okay. Well, I'm here to talk to the people who don't really necessarily know all about it. We are here to inform them, Tim. We know about it, but I want to get this information out. What stock will go up next week, says user 219-631-190-2557. What stock will go up next week? He asked me that shit, y'all, like I got a crystal ball. Tim said, for over 30 years, I've lived through all the bubbles. Empowerment answered the fuck out of your question. Thank you, Empowerment. Empowerment says many stocks will go up next week. Good answer. Microsoft is the reason the internet exploded, says OG Ants. Microsoft has a division called Azure. Think of Azure like a giant storage warehouse. Except instead of storing furniture or boxes, it stores data and it runs computer programs for other businesses. All right. It is a giant cloud, says Lost Boy Johnny. Kind of like Amazon's AWS. Azure income isn't offsetting the FCF burn. Azure is, I want y'all to know the everyday version. Imagine if you run a small bakery and instead of you buying your own giant oven or a walk-in freezer, delivery trucks, you just rent time and space from a massive shared kitchen down the street whenever you need it. You get all the power of a huge operation without having to own and maintain all that expensive shit yourself. That's what the cloud is for businesses. Microsoft, Amazon, and Google, they all run these giant shared kitchens and they rent out space and computing power to almost every company that you could think of. Banks, hospitals, retailers, especially AI companies that need a shit ton. They need massive computing power to run their models. This is one of the most profitable businesses on the planet right now, Tim. Because one company moves into your shared kitchen, then rarely leave. They're not going nowhere. It's expensive and it's risky to move all your data somewhere else once you got your shit set up. So this business builds a bunch of loyal, repeat customers almost automatically. Tim said Microsoft is pretty much scrapping Xbox and game divisions. Oh shit. I didn't know that. I didn't know that one. I don't know why they would do that. Empowerment says people asking some crazy questions, but great information, bro. Thank you. I appreciate that, Empowerment. Microsoft saw $100 billion in revenue, not profit, revs from Azure. They burned $175 billion this year alone on capital expenditure. I still like the company, Tim. Tim said that Microsoft. Tim is giving this Microsoft is overvalued, overrated, overvalued. Is that what you said? Overvalued. It's not worth as much as people think they are, says Tim. Pretty much. Am I right or wrong, Tim? He says Microsoft is way overvalued, is what he says. And I don't necessarily disagree, but I don't fully agree with you. All right. And we all entitled to our own opinion, you know. Am I gonna sell? Hell no. Is that information gonna make me sell? No. Actually, when it come down, we're buying more. You feel me, Tim? I know. Are you invested in Amazon, Tim? You fuck with them? What is your thesis behind Microsoft? I'm pretty much giving it now. He says, "Oh, I respect your opinion. That's what makes a market." No doubt, Tim. I appreciate that. Lost Boy Johnny says, "I love Amazon." My point is, I want to talk about how Azure grew 43%. Since you asked for my thesis, they grew 43% compared to a year ago. Wall Street, all right, basically, when I talk about Wall Street, I'm just talking about, because I can give a fuck what they think. I think that we are smarter than a bunch of them. I don't give a fuck how long they've been on Wall Street. They probably listen. So when I Wall Street, I'm meaning the analysts and the big investors who make predictions ahead of earnings. They just guessing what the fuck this shit about to do. They was expecting somewhere around 40%. On paper, 43 versus 40 looks small, okay? Just 3 points. But in the game that we in, that gap is everything. Y'all know that. That gap is everything. And here's the picture that I'm finna give y'all to help it click. Imagine, I gotta go back to food, I'm hungry. Imagine you run a food truck. Imagine you got a food truck. Every week, expecting to sell 40 plates of food. Now, based on how business has been going, you thinking you about to sell 40 plates of food based on how shit been going. Then one week you sell 43. That's not just a slightly better week. That tells you something is shifting underneath the surface. Maybe word is spreading. Maybe people are moving into the neighborhood. Maybe your food got a little bit more popular. I don't know. Whatever it is, if that pattern holds, next month you might blow past 45 or 50 plates. Way more than anybody modeled just a few weeks ago. All right. Tim says 15,000 Amazon long, losing all of it Monday on covered call. Shit. Here's what makes your position on Microsoft okay. No matter what happens, Microsoft is not going away. There we go. There we go. And Tim said it's about losing it. You know how I know you happy about losing it? Because you're doing a covered call. It's a win-win situation. If you, the fact that you're doing a covered call tells me all I need to know, Tim. Tells me that you own a lot of shares of it. And you're willing to let them go. Tim says, I want out before the next leg down. User 219631 1902557 says, is Micron going to go up this week for the second time in a row? I read that question. You asked it the first time. I'm not here to tell you whether it's going to go up or down. I'm here to make sure that you're prepared for if it's going to go up. You're prepared for if it's going to go down. So when you look at Micron, user 219-631-190-2557, you should be looking at the all-time highs. You should be looking at the most recent highs. You should be looking at the trajectory, the trend. Okay, find out if it's in an uptrend or a downtrend. Look for a good position to enter at. Figure out where you're going to get out at if it go the wrong way. Figure out where you're going to get out at if it go the right way. See, it solves your problem of wondering if it's going to go up this week. And if you believe in the company, invest in the company. Tim says, look at what it did in 1999 through 2002. There's your answer. Empowerment says, why people worrying about if a stock goes up? If you know how to chart, it don't matter. Nothing really matters. I start hearing Erykah Badu playing in my head and shit, boy, don't nothing matter once you know how to chart. ZDT says, what are some better trading platforms besides TradingView? Webull, Robinhood, Thinkorswim, you got a bunch of options. But if you're using TradingView, ZDT, go to jackofalltrades.vip and use my promo code at checkout, and you can pretty much get access to their full suite of indicators over there. All right. Use my promo code Ironworth, and you can get access to very great indicators on TradingView that pretty much tell you not only when to buy or when to sell, but when not to do anything. Okay. Because that's also going to help you. Sometimes you need to know when not to trade. Go check that out. jackofalltrades.vip and use my promo code at checkout, Ironworth, to get a discount. I even got my own indicator on the way, y'all. We building indicators over here now. Anyways, like back to Microsoft. I wasn't done with Microsoft. I was explaining to y'all how they grew 43% versus 40%. Azure. The market don't care what already happened, y'all. The market is a prediction machine. It's constantly trying to price in what's about to happen 6 months. What's about to happen in 6 months? What's going to happen a year, 2 years down the road? When a number beats expectations, so it could either fail to meet expectations, it could meet expectations, or it could beat expectations. Whenever it beats expectations, ladies and gentlemen, it's a big deal. It's not just good news for today. It is usually a signal that the model everybody was using to predict the future, it ain't good no more. It's too low. And now everybody got to redo their math. Your math is not mathing, and you got to redo your math. That type of repricing all at once across millions of investors is what creates a move this violent on Microsoft. Y'all understand? So Let's talk about the fear that had been sitting on this stock for over a year. For over a year. You got to think, Microsoft hit $500 in 2025 in October. October of 2025, Microsoft was $549 a share. And it came all the way down to $350 a share, and people still was looking at it like it was not worth what it's worth. You feel me, Tim? Hey, Tim, I thank you for being active. If y'all got any questions, please slow me down and feel free to ask any questions, y'all. This is a question friendly. There is no such thing as a dumb question. No such thing as a dumb question. Right now, we are more so talking about investing than we are trading stock options. I'm more so talking to my long-term investors right now, but we are also making short-term capital gains. Tim is letting you know what to do, user. I hope you're taking his advice. He's telling you to look into phantom orders and capacity overbuild cycles for the internet in 1998. Look at what happened from that period. I hear you. There's always different ways to look at these things. I'm a value investor, says Tim. Microsoft has been spending enormous amounts of money, and a lot of money, close to $190 billion this year, building data centers, buying computer chips that they need to run AI. So for well over a year, investors had one problem, one nagging worry sitting in the back of their minds, and that's, are they spending all this money because it's actually going to pay off, or are they just pouring money into a hole and they hoping? What's going on? V says, do you ever notice Microsoft has great news? It always comes in. It says, do you ever notice Microsoft has great news? It always comes in, even if the market is running barely move. Yeah, I did. It's like NVIDIA, a money taker, I feel. Yeah, I did notice that, V, but I still think it's worth, I still think in the long run it's worth owning. But trading it, you should definitely pay attention to the news if you're going to trade any stock or any stock. But Microsoft, NVIDIA can have good news, V, and still go down. Y'all ever seen that happen before? NVIDIA have good earnings and this shit still go down? Like, like I know what you mean by that money taker shit. But it's a reason, it's a method behind the madness too. That's a whole nother story, y'all, on how a company can still, how a stock's price can still go down even though they have good earnings being reported. Tim says, for me, I would pay 7 times revs for Microsoft at $312 a share. The profit and the proper investment says, love the setup. Thank you. This is actually just a weekend setup. All right. This is just some shit I look at over the weekend. Like, I got my watch list. Oh, I got my watch list right here behind me. I'm looking at some of the options on the options chain. I'll look at the heat map, and then I got my chart over here. I don't need too much of nothing, and we're not placing no orders over the weekend. I'm not saying it's going to $320 or $312, says Tim, but if it does, Tim is willing to buy. Tim is willing to buy. So Tim probably could do some shit like secured puts, because he's not saying it's going to go that low, but if it does go that low, he's willing to buy. So he can collect money until it goes that low, or if it goes that low. If not, cool, he collect money. If it does, he's willing to buy. It's a win-win situation. You feel me? Tim says, yes, sir. All right, so I remember I was telling y'all for well over a year, investors was worried about if they was really finna make money off the money that they putting into AI. Every quarter, that question got unanswered. They wasn't telling us shit. The stock got more and more depressed heading into this report. Microsoft was actually down almost 30% from its highs. And a lot of us, when I say us, I'm talking about people who are invested in Microsoft, we was losing patience with Microsoft. All right? Everybody got a cousin. I ain't gonna say everybody. Imagine you got a cousin. Imagine your cousin tell you that they invest in 50 bands to flip a house. And every month Month after month, all you hear is more and more money going in, more and more money going in. New roof, new kitchen, new everything. But they ain't sold shit, right? No buyers, no proof that this shit that is actually about to work. And then at some point, you start getting nervous. Even if the house itself look nice, you want to see the sale happen. You want proof that the investment is coming back around. This earnings report that Microsoft just had is finally showing the sale. All right. Demand for their cloud computing was actually higher than they could even build capacity for. You understand? So, Tim, this is where my bullish bias is coming from. Empowerment. This is my thesis on it. He said, but is it though? Yeah. At least from what they just told us, they gave us clarity. Hey Tim, did you even watch the earnings report, Tim? I think it's both of them, Tim. Tim, I think it's both of them. BOFFUM. Both of them. Demand for their cloud computing. He asked me, is it cloud or was it AI? Demand for their cloud computing. He says, yes, I was on the call. Okay. Demand for their cloud computing was actually higher than they could even build capacity for. That means a lot of customers wanted more than Microsoft got to give them. What do y'all know about supply and demand? What happens when, as a company, your customers want more than what the fuck you actually got? You can't even make it. I mean, let's say you make t-shirts and you only got enough material to make 1,000 t-shirts, but you got 10,000 people trying to get a shirt. That's right, Joe Butler. Supply and demand 101 tells us that. You think though, I knows for sure. You right, Tim. I don't know for sure. You right about that. Still bullish. Still bullish. Still bullish. That is the strongest demand signal that a business can show. Okay? Cash flow stayed strong even with all that spending. Growth accelerated instead of slowing down. That combination, spend a fortune and prove that the spending is actually working, is about the most bullish signal a company can possibly send the market. That's why the stock didn't move 2 or 3% like a normal good earnings report. It moved 15% because an entire year of built up doubt got resolved in one single call. And this is the last thing I'm gonna say on it too, Tim. I ain't gonna Microsoft y'all to death. I'm gonna say this. I'm gonna leave it alone. I'm finna land the plane. Another giant technology company reported earnings the same week, and they dropped hard instead of rallying. Right? The same basic story on paper. They spending a shit ton on AI, but they cash flow numbers came in weak alongside all that spending. Same category of company, same general strategy, completely opposite result in the stock price. Why? Because the market isn't grading companies on who's spending the most on AI. It's grading them on who can prove that the spending is actually working. That's the exact tool that I want y'all walking away with today. That's what you're going to leave this live stream with. Anytime you look at an AI related stock going into earnings, you need to ask yourself 2 questions. At least these are the 2 questions I recommend you ask yourself. Is the growth speeding or is it slowing down? Is the cash coming in fast enough to justify the cash going out? If the answer to both of them is yes, you can get a day like Microsoft just had. If the answer is no, then your ass is grass, Mr. Postman. If the answer is no, you ain't got to worry about catching no dog. You got to worry about a dog catching your ass. You can get punished hard even while spending the exact same amount of money. Now, I'm gonna move over to the technology sector. We pretty much already been talking about it, but we're gonna talk about it a little bit more. We're not done talking about it. And if y'all not done listening, then I ain't done talking. Do me a favor, y'all drop a W in the chat just so I can know y'all engaged. Hit the follow button if y'all new here. Tap the screen. Y'all help me out. Push me out to the For You page. That's what it does, y'all. It's helping. It's showing love. Remember, tapping is clapping, ladies and gentlemen. When you tap that screen, you're clapping for me. You're helping me out. Pushing me out to the For You page, and I really do appreciate it so much. All right, so another thing I want to pay attention to is the chip sector, because this piece completes the whole picture. Hit up recent meme rally, value stock, Wendy's. What are your thoughts? Wendy's? Tim, I'm gonna look at them at the end of the show. I'm gonna look up whatever stock y'all want me to look up at the end of the show, because I will get sidetracked if you get me talking about Wendy's right now. I get sidetracked. Excuse me. The Philadelphia Semiconductor Index. What you know about it? What you know about them, Tim? The Philly Semiconductor Index. Remember, I look at these indices like scoreboards, right? And you could think of it as the scoreboard that tracks all the major chip making companies bundled together into one number. That jumped more than 8% in a single day. That snapped a 5-day losing streak where the whole sector had been getting screwed. Memory chip makers led the way, with some individual stocks climbing 18 to 26% in one session. That's an enormous move for stocks that was just days earlier falling apart. Like, that's a lot within a 5-day span. All right. Philadelphia, what? Can you please repeat? I said the Philadelphia Semiconductor Index. It's just tracking all the major chip making companies. All right. Memory chip makers led the way. There are two forces at work here, and y'all need to understand both, because they show up together in markets over and over again, not just this one time. I couldn't even say it, and Tim got it out. Excuse me. Short. We're going to talk about the short squeeze. Who can tell me what does the short squeeze mean? What is a short squeeze? And if you don't know, now you know. You're going to know after we get through explaining it to you. Who can explain what the short squeeze is and what does it mean? Do 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 do. What does it mean? Philadelphia Semiconductor Index. He answering that question. Okay, I got y'all. It's okay. In the days leading up to this rally that we just dealt with, a lot of traders, all right, have been betting against these chip stocks. A lot of people was betting against the microchip stocks, all right? That is called shorting a stock. Are we clear? Put a W in the chat if you understand that when you bet against a company or bet against a stock, you are shorting it. If you say, I think that company is going down, I think that company is not going to do too well, I think the stock price is going down, even if it's futures, Forex, I don't give a fuck what it is. If you betting against it, you are shorting it. All right, that's what's up, nephew. Said he understand. Cool. So there's a simple version of how that works. Instead of buying a stock, hoping it goes up, okay, instead of you buying that stock and hoping that it's going to go up, a short seller is going to borrow shares from someone else. Slow down with me. All right, I don't think it's going up. I think it's going down. So let me borrow some shares from someone else. I'm going to sell those immediately at today's price, right? And I plan to buy them back later at a lower price, return what I borrowed, and pocket the difference. That is short. That is how you short. This is betting on a stock falling instead of it rising. You now know how to make money in a market that is going down. You now know how to make money on a company that's losing value. Any questions? So, any questions? Whenever, please bring me the questions, because if you confused about something, there's probably 30 other people confused that's scared to ask. All right. So please feel free to ask the question. Tim says you pay a carry cost to borrow the shares. You're willing to. You're willing to. Now, whenever a heavily shorted stock, all right, let's say a lot of people bet against this company or against this stock. You got a lot of people shorting it. Remember, y'all just learned that short means I think it's going down. So imagine a lot of people bet against it. A lot of people shorted it. And then suddenly it jumps instead of falling. Uh-oh. Uh-oh. Every one of those short sellers is losing money by the second. And it keeps getting worse the higher that the price goes. To stop the bleeding, who can tell me what they have to do to stop the bleeding? What has to happen for them to stop the bleeding? Tim, you the only one can't answer. Tim says, when this happens, there is an infinite downside risk. Selena, not quite. You close, but not quite. Yes, a stop loss helps with stopping the bleeding, but in this case, they have to buy. Imagine you saying that I think this company is going to go down and you shorten that company and now you're forced to buy. To stop the bleeding, they are forced to buy the stock back immediately. Guess what? No matter what the price is. Just for them to close out their bet. But that emergency buying, guess what? That emergency buying adds even more buying pressure to a stock that's already rising. It's going to push the price up even further. If you are still confused about what I'm saying, there's a movie on Netflix. It ain't on Netflix, y'all. I'm sorry. I don't know where it's at now. It ain't on Netflix no more. There's a movie called Dumb Money that you can go and watch. That'll help you understand what I'm saying. I want to say The Big Short too. The Big Short might be a good movie. Yeah, The Big Short might be a good movie to watch. Go watch The Big Short. Yeah, Tim. Yeah, you right. You right. The Big Short is a good one. Y'all go watch The Big Short. But hey, Tim, Dumb Money is a good one too. Dumb Money will have you wondering what the fuck was you doing during COVID. If you didn't get to experience trading stock options in that time, oh man, you missed out on one hell of a market. GameStop, the story of what had the GameStop squeeze during COVID is a good thing to study to understand what I'm talking about right now. It's y'all homework. That's y'all homework. If you haven't watched The Big Short or Dumb Money, your homework is to go and watch that and come back and say, Coach, this is what I learned from watching that movie. You ain't got to do it. I'm going to give you a fucking F and you're going to fail my class. I'm just playing. I'm just playing, y'all. I'm just joking. The much bigger squeeze many people don't know about is DGAZ. Selena says stock. Well, I'm talking about the whole semiconductor. She says hold the stock, not hold the stick, not hold the stick. But yeah, my point is when that happens, it's gonna cause it to keep rising. So whenever that, man, listen, it's a snowball effect. It's a snowball effect. The chain reaction is called the short squeeze. That's what it's called. So imagine a tug of war battle. One team pulling very hard in one direction, and they are confident that they got it. They think they won. They think they won, right? And then suddenly the other side let go of the rope all at once, and everybody on the confident team goes flying backwards, out of control. That is what a short squeeze looks like in the stock market or on a stock chart. Tim says it was 3 times natural gas short that went under, got delisted and squeezed from 0.20 to 3.2 million per share. God, I missed out on that one. I ain't know that was coming, Tim. You said many people don't know about it. Yeah, I'm one. Count me amongst the many people that didn't know about it. you know. The other thing, a short squeeze by itself is just mechanical buying. It doesn't last. All right, y'all. A short squeeze doesn't last unless there is something real underneath it. And there was. Memory chip prices, right? SanDisk, man, fuck all that. Go to Best Buy, go to Walmart and try to buy memory chips or storage. Go try to buy external storage. The video games is more expensive. You could tell there's something going on underneath this all. Tim says I short all 3X funds because they're decay pigs. What stock are you looking at? That's the NASDAQ right now. We talking about the semiconductors, the microchips, technology, right? But I was saying that whenever a short squeeze happening, what happens, the only way it's real is if there is something real behind it. So when it comes to memory chips, the actual physical costs to buy those chips in the market have been climbing and climbing and climbing. So when the real physical product is getting more expensive because more people want in, remember, supply and demand, one-on-one. Whenever the product is getting more expensive because more people want to buy it. And then they don't got enough fucking materials to supply the people that want to buy it. That's not sentiment or emotion. It's basic math. Rising prices for the prices for the actual hardware tells you that the AI build out Microsoft just proved is working, is also creating real demand for the chips that power all of it. All right. It's the same story showing up in a different part of the supply chain. Microsoft and other cloud giants prove that AI spending is paying off. That's what we're seeing. Just think about it. You see Microsoft make money from what they spent. You're going to look at the other AI companies and just think about how much money and how much this is almost like when SanDisk shot up, Seagate, a few of the other ones exploded right with or right behind it. I don't think this is a bubble, Tim. I don't know about that. I don't know about this being a bubble. I don't think the internet was a bubble. The internet wasn't a bubble. Every company that came out wasn't a hit. Tim says they are spending too much money though. He says it was. It was because some investors was investing in anything that had .com on the end of the shit. So I get what you mean, Tim. People are spending too much money. But are we though? But are we though? How? If you get a big return on investment. Gigi says forward PE of QQQ is 20.3. By the way, for all of you bubble people. Thank you, Gigi. Thank you, Gigi. Here's the thing. Every world-changing technology goes bust before it makes it big. When do you think SPY will drop? Oh, it just did, Selena. It just did. Right now we got to. Well, I know what you mean by drop. You want to see that. You want to see SPY get back into the 600s, 500s. You want to see a drop like it did last year, don't you, Selena? I know what you're talking about. So yeah, we just said. I don't know how to pronounce your name. I'm gonna call you Said. Said we are just at the beginning. Tim Soul says fiber layers in 2000 went bankrupt. You talking about the .com bubble? All I'm saying is, Tim, Microsoft and a few other of the cloud giants, they are proving that that spending that you said is too much of, they are proving that the spending is paying off. That spending is data centers, and data centers are packed with chips. As the demand for that AI infrastructure grows, demand for chips grows with it. As chip demand grows faster than the chip supply, the chip prices rise. As the chip stocks that have gotten beaten down purely on fear finally getting a chance to show the truth underneath, while all the traders who bet against them get run over trying to escape at the same time. Okay? One story showing up in three different places: the cloud giant, the chip prices, and the chip stocks. GG says Amazon and Microsoft cloud earnings were big. So the investment seems to be paying off already. It does. It does seem that way, GG. But looks can be deceiving, but yes, it does seem to be that way. I think taking profit wouldn't be a bad idea, you know. But also, this is what in long-term investors, do you think Warren Buffett looking at Microsoft like, let me sell some shares right now, or looking at Amazon like, let me sell my Amazon shares because it's up? The earnings were an illusion, marketing to market to market gains from Anthropic and OpenAI investments. Says we are early. I think so too. You know why? Because I think 80% of the world ain't even really caught on to this shit for real. Could be wrong. But I'm saying, boy, we really don't understand AI for real and how big this is going to change everything. We're not getting into robotics, robots, flying cars, and I ain't talking about all that shit, self-driving cars. I'm just solely talking about microchips right now. Oh, hold on. I got one more. This company right here. Last week, I gave out a signal that I was buying Applied Digital. Okay? I want to explain. I want to go back over this and explain. So I did give out a signal and say, hey, I'm buying Applied Digital, right? According to my calculations, this is me pushing my imaginary glasses up my face. According to my calculations, this is a good level. I like this level. All right, let me see. Applied Digital. Let's talk about APLD. APLD. Add that to your watch list. APLD. Right? Because I know a lot of y'all watching this with me last week. I want y'all to understand both sides of it, not just my upside targets, because right now I'm targeting $35 and then I'm targeting $50. Love the chart, hate the sector right now. You like the chart, but you hate the sector. I got you. All I'm going to say is you're betting versus $1 trillion companies with billions in profit and brightest, and you're betting against $1 trillion companies with billions in profit and some of the brightest engineers. Tim says, what profit? Hey, I like y'all debate in the comment section. I'm loving it. Great topic, by the way. Uh-oh. We got one of these shit coin pushers in here. Y'all better not go buy Kate coin. It's a scam. Don't buy Kate coin. It's Yuli 9 times out of 10 created that coin. And as soon as y'all put y'all money in it, Yuli is going to withdraw the money from the coin. Let me get them up out of here. We don't do shit coins. No, Yuli, you gone. You're gone. We don't do shit coins over here. Basically, meme coins for those that don't know. You want to invest in something that's a joke, be a degenerate. I'm not saying that the meme coin people ain't made a lot of money, but it's a fucking joke. Go Bitcoin signals, you got to go to. What's up? How you doing? You say one thing crazy, I'm getting you out of here. But just because your name look like that, I got to mute you. Back on topic. What was I talking about, y'all? APLD. All right. I told y'all I'm targeting $35 and I'm also targeting $50, but I'm going to change the time period that I think this is going to happen in. What up, Dino? What up? What up, Richie? I thank you for the follow. Hey, everybody that hit the follow button, big shout out to y'all. Oh, remember, my first target, $36. Second target, $50. But honestly, the price targets aren't even the most important part of the conversation. The bigger shift is how long am I going to hold this shit? Abraham, OG, I'm new in trading. Okay, I got you. For all the people that's new in trading, you should be inboxing me your name and number. There's no reason why. If you serious about learning, I need to get with you on a 1v1 level. Right now, okay, adjust your mic. Thank you, V. Good night, GG. Thank you for pulling up. Thank you for pulling up. Is that better, V? Good night, GG. I appreciate you for pulling up. Okay, cool. Do you like Oracle because of its big backlog? I don't like Oracle, Dino. I don't like Oracle. So should I buy APLD? I'm telling you that I'm buying at this level. I'm not only buying at this level, I'm getting ready to enter into a bullish position. And I'm telling you why right now. I'm telling you where I'm targeting. I'm targeting $35, $36, and I'm getting, or $50 is the second target. So I got two take profit levels, and I'm going to get out the trade on a trading level, right? On the options level. Let's say if it go any lower than $25, I'm done with it. I don't like it under that price level. All right, that's a large ass stop loss. Some of y'all need to do $26, $27. What time frame is that? This is a daily time frame. This is a swing trade, okay? Because I'm going to be in the trade for longer than 1 day. All right. Thank you for the gifts. Hey, everybody that sent the gift, I love y'all. I appreciate y'all so much. Again, oh yeah, Booker, thank you for watching my live for 200 minutes, man. Congratulations. Would you be working with an options prop firm? Can pay monthly at minimum? No. Ball Out Trades LLC, but I do thank you for the offer. I appreciate it so much. All right. Like I was saying though, if you are trading a stock short term like this, all right, because my holding period moved from short term to medium to long term. This matters more than the numbers themselves. I want to explain to y'all, because some of y'all are going to hear me tell y'all, oh, I think APLD finna go up to 35, then it'll go up to 50, and you'll go get in a call option that expire next week, instead of listening to what I'm telling you or doing some type of due diligence, doing some type of research. All right. So if you are trading a stock short term, you are betting on a quick catalyst. You betting on a headline. You are betting on a technical bounce. Something that needs to play out in a couple of days. Something needs to play out in a week or two. Your whole plan is built around getting in and out fast. So all of y'all that's holding shit, if you holding it and it gave you money and you held it for too long, you didn't take profits, I can help you with that. Okay? I'm here to make sure you never do that shit again. To me, that's the equivalent of me being your personal trainer and I caught you outside before you got in the gym trying to eat a rack of ribs and I slapped the fucking ribs out your hand. That's what I'm here to do. I'm here to make sure that you don't fuck progress. Like your content, Iron. I thank you so much, Tim. I appreciate it. I appreciate you for the engagement. You've been a wonderful audience member. I thank you for that. Yep. I appreciate the engagement so much, man. Y'all, any questions, please ask them. APLD is at a discount and maybe consolidating. That's what I want to talk about real quick. Right? So when you buying short dated options, not just any stock that you trade in short term, you need something to happen fast. You need to take profit fast too. Get in and out quick. But if you shift to a medium to long-term view, you are now saying, I believe that the actual business underneath this stock is going to be bigger a year or two from now than it is today. That is a completely different bet, and it literally changes everything about how you should handle the position. How big a position you're comfortable holding, and how you react when the price pulls back, and how much day-to-day bullshit that you willing to sit through without flinching. Because some of y'all jump every time the stock go like that. Every time the stock go like this, you jumping. You flinching. This is a red day. This is, it pulled back 1% on your ass. You jumping. You flinching. You shouldn't be. How do I feel about Tesla? I don't feel. I invest, Diamond. I don't feel. I invest in Tesla if that's what you asking me to. It's in the Roth. Tesla not about to come out with the best flying car in 2046, and I ain't investing in them in 2026 like I didn't see the shit coming. But I'm a long-term investor. You notice I brought up 20 years down the road. Y'all got to think about the future. I love trading ETFs. Exchange traded funds. Anyways, David, let me stay on topic. I will go sideways. I will on a side mission into eternity with y'all. All right. Let me stay on topic. I want y'all to understand what you need to be thinking about when you are trading, and when you invest into and you planning on making money from that stock that week versus investing in it and planning on making money from it down the road. The reason for that mindset shift is real, okay? Contracted business. We want to talk about what's happening with APLD right now. Roughly 1.4 gigawatts of long-term IT load contracts have been signed. Let's break that word down because gigawatt sounds very nerdy and intimidating, but it's very simple to understand. When y'all done with this chat, you are going to know what a gigawatt is. When you're done with this live stream, a gigawatt is just a giant unit of electrical power. Okay? A big unit of electrical power. Think about how much electricity it takes to run an entire small city. We talking about lights, homes, hospitals, everything all at once. That is the scale that we talking about here when we talk about gigawatts. Except this power is going toward running data centers instead of a city. All right. So that 1.4 gigawatts of contracted load corresponds to about 2.15 gigawatts of utility power needed to support it. It is tied to roughly, I want to say 30 billions. Let's just say billions. Billions. I'm going to get the exact number. We're going to get the exact number. I had it written down. All right, here we go. 36 billion. It's tied to roughly $36 billion in guaranteed base lease revenue. If every option on these contracts get renewed and expanded down the road, that number could stretch all the way toward 86 billion. So what am I saying? What am I saying about APLD? Basically, this isn't a company hoping customers are going to show up someday. This is a company that already got years of locked in, signed, contracted revenue on the books. Whether the stock market notices it now or not, whether y'all see this shit today or not, tomorrow or not, it don't matter. It's already locked in. That's exactly the kind of foundation that earns a longer holding period, because I'm not just betting on a rumor. I'm betting on paperwork that's already been signed. Put a W in the chat if y'all picking up what I'm putting down. Please let me see some W's. Put an L in the chat if you don't understand it. You want me to re-explain it. I don't mind re-explaining it. The L don't stand for loser. It stands for lesson. You need the lesson. I'll re-explain it to you. And I'll make it even more simple. But if you get what I'm saying, I need to see the W's in the chat. If you just walked in, hit the follow button. You know, share the live stream with somebody that might need to know this information. Because, y'all, it's not the information that's going to make you money. It's the execution. Right? What are you going to do with this information? Knowledge is not power. Applied knowledge is power. So we apply the information we learn here at Ironworth Trading. So the other half, this is the half that a lot of people leave out. This is the half that's going to separate you from being a real trader or just a bullshitter. What would prove me wrong? See how I asked that simple question? Y'all see how I'm not fucking delusional? Prove me wrong. How do you manage risk with swing trading? Good question. Good question. What was your thesis to begin with? First of all, it takes so much to hit a stop loss on a swing trade. A lot of money has to happen for you for your stop loss to get hit on a swing trade. But to manage risk on a swing trade, you should be able to stomach a little bit more of what it is doing. I just talked about it. I said if you trade in the stock short term, Des, you betting on a quick catalyst. You betting on a bounce, a short term bounce. You need something that's going to play out in a day or in a week, right? On a day trade, especially on a day trade. But your whole plan is built around getting in and out real quick on a day trade. On a swing trade, you have shifted to a medium to long-term view. You are now saying, I believe the actual business underneath this stock is going to be bigger months from now, years from now, a year or two from what it is today. I don't set my expiration date out far enough. There you go. Where you at? There you go. You're right. You got it. And guess what, Des? The more time you got, sometimes, okay, when you got more time, that's not always the answer. But at least if you have more time, that theta ain't gonna fuck you over. That theta ain't gonna kill you. You won't get killed by the theta, that time decay. Tim says, look into delta neutral hedging. Thank you, Tim. Hey, please listen to what Tim just said. Not even just that, Tim. I think we need to knock it down a notch. And I think she needs to study the Greeks overall. I know you might know that I'm not saying you don't know the Greeks. I'm not saying that at all. I'm saying study them because they will help you to better understand the question that you asked. I need you to understand theta and I need you to understand delta before you even get into delta neutral hedging. What news channels should we watch? You don't want me to answer that question. But since you asked me, I guess I'll answer it. I, believe it or not, I consider Twitter to be a better news source than the actual fucking news. I know it sounds crazy. I know, but we live in a day and age where Twitter is finna have the real. The comment section, at least I know with the people, I trust the people. The power's in the people. How far out do we buy for APLD? That's what I was just saying, Selena. My horizon has changed. At first I was looking at a month out. Now I'm thinking we are very, very early in a company that's going to be worth hundreds of dollars, if not thousands of dollars. How SanDisk is worth over 1,000 a share. I feel like this company could potentially be worth a shit ton of money, and we are early talking about it. Not telling y'all to buy. This is not financial advice. This is educational information. 2028. That's more than enough time, if you ask me, as far as to benefit short term. But I'm thinking even further than that. I'm thinking more than 2 years, 5, 10, 20 years. This is going in the Roth. This is going into retirement. But we also looking at it like, yeah, short term, yes, this could hit $36, $50. But I'm thinking bigger. I'm saying on it for my traders, for the stock options, I'm giving you my targets. Right? But long term, I'm very bullish on this company. I got a few other ones that I'm very bullish on, but this one I wanted to share with y'all. Short-term trade right there. And you can enter at the market price. Or you could say, I want to see if it's going to come back down. However you want to do it. $10 billion market cap. You just looked it up, said? You just looked it up? Yeah. So, that 1.4 gigawatts of contracted load corresponds to the 2.15 gigawatts of utility power that they need to support it. That's $36 billion in guaranteed revenue. I'm fucking with the company. All right. Now, I'm going to watch for a few specific things to prove if I'm wrong. Remember, I told y'all, you got to always admit, hey, I could be wrong. What is going to prove me wrong? If any of these signed contracts get canceled, delayed, or renegotiated down instead of up, that guaranteed revenue number that I'm so hyped up about, it stops being guaranteed, and the whole medium to long-term case will weaken very fast. All right, so I watch the utility power side too. That 2.15 gigawatts of power, it has to actually get delivered and connected on schedule. We talking about enough electricity to power a whole fucking city being used on the data center. All right. Just so y'all know what we talking about with the gigawatts. And I'm also looking at the power infrastructure. The power infrastructure build outs run into permitting delays. If they run into any delays, I do government contracting, so I know what type of shit can throw a wrench in the whole operation. A delay there doesn't cancel my thesis, but it pushes the timeline even further out. Time matters, y'all. When you are holding a position, time matters. And keep an eye on the broader AI infrastructure spending story. We got to look at the bigger picture. We just spent this whole show breaking down how that works. If the cloud giants like Microsoft ever show that they slowing down growth or they weakening cash flow in a future quarter, that is the canary in the coal mine for every company, including APLD. Y'all know what I mean when I say the canary in the coal mine? Imagine being in a coal mine and you see a beautiful fucking bird just fly past. It's going to stick out like a sore thumb. This is something we should probably pay attention to. All right. So that's discipline, ladies and gentlemen. Knowing your upside target. Whenever any stock you looking at, you know where you target it to go to the upside. You need to also know your invalidation point just as clear as you know where it's going to go to the upside. Invalidation point is you saying, if it come down to this level, I'm getting the fuck out the trade. If it come down to this level, I'm getting out. I was wrong about what I was predicting. I was wrong about my thesis. That is being realistic with yourself. All right. Now, if you only know one of those two things, you don't have a trading plan. You have hope. Now, what I really want y'all to walk away with, because none of this show matter if you can't use this shit the next time a similar setup shows up. Okay, and trust me, it's gonna show up again, y'all, in a different name, a different stock, a different sector, a different week. The market does not reward spending. It rewards proof. So company after company has been spending a shit ton on AI for 2 years. They've been blowing money fast. For 2 years, they've been spending a lot of money on AI, right? The ones that get rewarded with days like Microsoft, Like Microsoft just had a very great day. I don't think y'all really understand how much 15% in one day, like how crazy that is. Y'all don't get it. That's a lot of money being made in one setting. I'm gonna say in a week. We're gonna look at the whole week, how much it went up or down within that week. But my point is, if you want a day like this, then yeah, you gotta pay attention to the spending. The proof, I mean, because we don't give a fuck about how much they spending. We want to see the proof. If they can show that they making money in cold hard numbers, and they showing you that the money that they spending is actually converting into revenue and cash flow faster than we expected, they're gonna make money. But the ones that get punished are they the ones that spending the same money, but they not showing you no proof that they making money yet. So guess what? Your duty as an investor or as a trader is not to guess who's spending the most money. That don't fucking matter. We're not pocket watching. We're not pocket watching. We don't give a fuck how much money you spending. We are pocket watching, kind of. We kind of are. But we don't care who's spending the most money. Anybody can see who's spending money. That part easy. All right? It's in every headline. Your real duty is to figure out who's about to prove that the spending worked before the earning reports drop, not after the stock already jumped 15%. Okay? That's not luck, and it's not a gut feeling. That's reading contracts. That's reading capacity numbers, okay? And demand signals ahead of time. We paying attention to shit ahead of time. The same exact way we just broke down APLD's contracts that they got with the electricity and shit and the lease revenue. That's the same way you need to do with any company you investing in. The short squeeze in semiconductors teaches you a second lesson that's just as valuable. Fear-driven sell-offs create the exact setups that produce the biggest bounces. I'm going to say it again. Whenever a stock is going down because of fear, that's going to create the opportunity for the biggest bounce, and you are going to see that next time and benefit from it. You are going to be able to position yourself to make money during the next big bounce now that you know what to look for. Okay? Study short squeezes. Go watch The Big Short. If you haven't seen that movie, go watch The Big Short. If you haven't seen Dumb Money, go watch Dumb Money for you to learn what is a short squeeze. All right? But only when the fundamentals underneath it was never actually broken to begin with is that going to work for you. Sometimes the stock fall off and there was no reason for this shit to fall. But fear. And when you see that, you know, hey, ain't no reason for this shit to be down. Microsoft was down. Everybody should have been thinking that way. Amazon was down. Everybody should have been thinking that way. Netflix. Oh, don't get me started on Netflix. Don't get me started on Netflix. But my point is, you want to pay attention to this type of shit. So those 5 days of the chip stocks getting sold off before this rally, they weren't caused by semiconductor demand disappearing. Basically, it wasn't caused because semiconductors ain't making no money. No. It was sentiment. The way you and I feel and think, our opinions. They like assholes. Everybody got one. Some of them clean. Some of them fucking stink. Some of them dirty. So don't come in here with your stinky ass opinion like it mattered. Or don't think my stinky ass opinion matter, because, you know, I know you like to think your shit don't stink, but lean a little bit closer. Y'all know the rest of the song. It was the sentiment. It was people's opinions running ahead of the actual facts. When the facts finally caught back up, rising chip prices is what you started to see. Real proof that AI spending is working, and the snapback was violent. The bounce back was violent because reality and price had drifted far apart and they had to slam back together. Selena says, when trading SPY every day, do I buy 2 weeks out or a month out? You trading SPY every day? Do you like 0 days to expire, Selena? Selena, get with me on a 1v1 level so I can really help you. Okay? So I can really help you. Tim recommends 3 days. I think a month out is safe. I think a month out is safe. 2 weeks is safe. 3 days is dangerous as hell, Tim. Tim, we don't know where she at. 3 days dangerous. 2 days dangerous. 1 day is dangerous. 0 days to expire, even more dangerous. Trading stock options, super dangerous. Hey y'all, Tim has been one of the experts in the live stream the whole show. Tim, I'm gonna ask you a question right now. I want you to give your honest opinion. Is trading stock options dangerous? I know a lot of y'all like, dude, anything you do is dangerous. You could choke on a fucking walnut. Anything is dangerous. I get it. But you know the dangers of trading stock options. You need to understand what you are getting yourself into. And you need to understand the difference between leverage and risk. And you need to understand the Greeks. Because they'll answer a lot of your questions. A lot of y'all questions can be answered simply by paying attention to the Greeks. And once you understand that, it answers all the question once you understand volatility, implied volatility, the Greeks, volume, okay, liquidity. It answers these questions for you. If there's no volume or no liquidity, that's going to determine what type of option contract you buy. The implied volatility should alter what contract you buy. The Greeks is a variable that you cannot ignore when you are picking a contract. The spread is a variable that you cannot ignore when you are picking a contract. It is much deeper than you just saying, I think it's going to go up, so I want to buy a call. I think it's going to go down, so I want to buy a put. There's other things you need to look at. Danny says the market is unforgiving. It's unforgiving, but you know what I noticed, Danny? The market ain't never took nothing from me. The market has never took nothing from me. I've given everything that has ever, I have given everything that the market has ever taken. I gave it to the market. Any loss I ever took, I did it. I chose how much I wanted to lose, okay? And if I didn't choose, the market chose for me. I'm going to say that again. If you don't choose how much you're going to lose, the market going to choose for you. I'm not saying you're going to lose every trade. I'm not saying you're going to lose the trade. I'm saying when the loss comes, you had control over it. And it should be either a big win, a small win, a break even, or a small loss. A big loss is not an option. Who can tell me how true is that? How true is that? I'm not saying you telling me, yes, that's true. I'm asking you to tell me, how can that be true? How do I have control over how much I lose, coach? What do you mean? So I can only lose $20 this week? Yeah. Coach, I'm willing to lose 100. Okay. Well, let that be all you fucking lose if you take a loss. Once you go dipping over your rules and shit that you set before you got in the trade, that's where you start to fuck up at. All right? That's where you start to mess up at. You don't build this skill by watching one show one time. Do y'all understand that? You build it by doing this over and over. Earning season after earning season with somebody in your corner, correcting your reads in real time. Until spotting this pattern becomes a second nature for you. Instead of something that you only see after the fact. After it's too late. Right? Hindsight is 50-50. You're going to always have 50-50 vision looking back. Okay? What I'm saying is get some help. You got help. Help is here. Help is on the way. Inbox me. Your name and your number and the best time to call you, and I will help you. And by the end of our session, you will be a better trader, a better investor. Maybe you don't know how to trade or invest. We're going to get you started. There's no time to waste. And I'm going to make sure you save time, energy, and money. All right. Now let's bring it all the way home so I can land this plane. I got shit to do. Inflation cooled off slightly this week that just happened, which eased the fear of the Feds raising the rates further. Microsoft proved with real numbers that its AI spending is converting into faster growth more than anybody expected, and the market rewarded that with the single biggest one-day gain in stock market history. Okay, the microchip stocks exploded on a mix of short squeeze and real physical rising demand underneath the sentiment. An APLD's shift to a longer holding period is backed by real signed contracts with a clear list of what will prove that thesis wrong if you ever start to see it. If y'all followed all of that and it actually clicked for you, good. That means that you're ready for the next level. And the next level is not watching more shows. It is learning how to spot these setups before the headline hit, right? Before everybody talking about the shit, not after the stock already moved 15% without you in it. Okay? But that's exactly what I do one-on-one with people that I mentor. We build your ability to read the market together. We're going to make sure you know what you're doing contract by contract, earnings report by earnings report, and validation point by invalidation point. Until you are not reacting to the news anymore, I want you to be positioned ahead of it with a real plan, not a hope. So if you're serious about that, the link is in the description. You can inbox me at any moment. Stop watching the money move and start moving with it. Okay? Put a W in the chat if you learned anything today. Put a W in the chat if you are looking forward to learning again. And if you are super serious about learning, go ahead and inbox me right now. Don't wait. Don't wait. There's nothing holding you back from investing. There's nothing holding you back from trading. And I know that this might, if you are new to trading or investing and the show was a little bit too advanced, I really need to reach out to you, or you reach out to me on a 1v1 level so I can meet you at your level. Right? I may be way down the street and I need to pull it back a few blocks. It's okay. I'll come to you wherever you at. But it starts with you inboxing me and reaching out. Some of y'all live life on do not disturb. Okay? We don't got no motion living life on do not disturb. Okay? It ain't that something is going to disturb you. It's that you're easily disturbed by stuff. This is something that shouldn't disturb you. And sometimes you need to get out of your comfort zone. You too fucking comfortable. You living life on do not disturb. Too comfortable. All right? That's a metaphor. I don't give a fuck if y'all phone on do not disturb for real. Because I ain't calling y'all. You feel me? I want y'all to understand that. Reach out to me. I got you. I'm not going to bother you. I got shit to do. All right. Good night, y'all. I'm glad y'all stayed. This was a wonderful 90-minute webinar, completely free. All right. This was a completely free webinar. All you had to do was pay attention, spend time. All right. You didn't have to pay money. You didn't have to spend money. All you had to do was pay attention and spend time. But if you are interested in furthering your education, go ahead and inbox me. I got you. With that being said, we're going to make today, it's already over with, but today the rest of the night going to be twice as good as yesterday and half as good as tomorrow. Okay? I'm going to see y'all tomorrow. I'll go live again tomorrow morning. I'll see y'all then. I usually go live at 11. I might come back on again later on tonight. Who knows? That's why y'all want to hit the notification bell so that you can get notified whenever I do these free webinars. You will rarely see me charge people on TikTok for a class. I come here, I do the live stream, and if you miss the live stream, most of the time I post the replays on YouTube. So if you don't want to miss it at all, you might want to go ahead and go subscribe to me on YouTube. The link is in my bio. You hit the link tree, okay? A few things we got cooking. Credit repair this month, y'all. Credit repair. If you want to build business credit or you want to repair or build your personal credit, this is the perfect time to inbox me, all right? My affiliate is going to take care of you. Without a doubt. If you are also looking to become an entrepreneur and start a business, but you don't know where to start, inbox me. Now is the time. This is your sign to get ready. If you got a business and you don't know where to go from here, this is the time for you to reach out to me. Somebody's here willing to help you that can help you. Okay? All right. Now, with that being said, I'm gonna let y'all go. Y'all enjoy. I'm gonna enjoy the rest of my night. I hope y'all do the same. Y'all been a wonderful audience.